Canada is hinting at a promising outlook when it comes to bringing inflation under control. It could also mean interest rate cuts are on the horizon. So what does that mean for your mortgage and more? Peter Sashecki of Everything Financial joins us this morning to talk about your options. Good morning, Peter. Good to see you.
Nice to see you, Carrie. Good morning.
Okay, so with all the talk about potential rate cuts, maybe as early as June, fingers crossed, when is the best time to requalify for a mortgage?
Not until you need to. Don't jump the gun, especially with these rates the way they are. Wait until you actually get to your renewal date or within about 30 to 60-day renewal date to have that discussion at the moment.
Okay, so is there a perfect time to port one's mortgage from one financial institution to another? Because I think, we're always looking for the best deal, and one financial institution may have what we want.
They do, but you may have to requalify. And requalifying with the stress tests and everything else may not be that easy for you depending on your situation. So before you go to make a move or port a mortgage from one institution to another, or from a piece of property to another piece of property because you sold, you have to talk to your mortgage broker or your registered financial planner and their firm and know the ins and outs to make sure you don't back yourself into a corner and then get stuck with what we'll just call at this moment a less than desirable rate.
Okay, so what about changing the amount of your current mortgage, what you're paying for that, or even the amortization period, the length of time that you would be paying?
That's a definite requalification issue. Then you have to go through the whole process of requalifying. What if your income's changed? What if your debt load's changed? And I'm talking about those things not in a favorable manner, make it more difficult for you to requalify. So again, go through the process before you commit, because it may not be as easy as you think, unfortunately.
It's never as easy as you like it to be or what you think. Okay, so what about renewing the mortgage? What would you advise that people first consider?
Well, the great thing, Carrie, about renewing your mortgage, no requalification. Unfortunately, get your ducks in a row, because the institution, the bank, the mortgage broker, but mostly, the big banks, etc., they have you kind of backed into a corner. You're kind of at their mercy. So what you can do is look at maybe requalifying through your mortgage broker, get that letter that shows you you're going to get a better rate somewhere else, and encourage your existing institution to match that rate. And in many cases, they will. That's the only way you can really protect yourself. But do not sign that renewal letter without doing your own homework. It's your money, your right to protect it, and your right to save yourself on some interest, because I can pretty well say it's a safe bet that a lot of times you do not get the best rate coming out of the blocks, and they will give you a posted rate. Posted rates are not the best rate. So you always have to do your homework and really play hardball and get them to sharpen the pencil. It's your money, it's your right. So make sure you get the best rate you can.
Yeah, maybe make them believe that you might go to another financial institution, and hopefully they'll give you a better rate. Okay, just quickly before we let you go here, what's your take on CMHC?
Who's to say you won't go?
Well, that's right, and that's your option. Before we let you go, what is your take on CMHC insured mortgages?
If you're CMHC insured, then you don't need to requalify, which is the great thing. And the CMHC, you do get a rate for approval, when you're just renewing. That's a better option. It's about 2% lower than how people requalify right now, because you've already paid for, and you're already paying for the CMHC insurance. So if you're still in that boat, you've got that insurance thing, but at least you have some protection for yourself. And eventually one day you want to get out of that. And if you ever have a chance when you're purchasing to maybe have a family member help you out to not pay that extra insurance to CMHC, because you get the necessary amount down, like the 20%, so you don't have to pay them. It's always best not to go that money you're never getting, but you're paying interest on.
Right. All right, Peter Sashecki, Everything Financial. Good to see you're wearing your Canucks blue, by the way, as you know. I know you're on vacation. You're coming back next week, but it is a big night tonight.
It is. I'll be watching it really late in the middle of the night, but I'll be watching, and then we'll see you, Carrie, next Wednesday.
Okay, perfect. Good to see you. Thanks, Peter. Have a great day.
All right. Take care. You too. Bye.